welcome back to my channel. This is Gurvinder coming at you on a weekly basis. So today's video, I'm coming back, continuing the topic of interest rates, housing in Canada, and obviously in the GTA in Ontario, and just what's potentially upcoming and what's currently going on in the market in terms of home sales and pricing that we're seeing. A little bit of the term thrown around crazy, so I'll definitely share that with you. So as usual, you probably hear in other videos that it's not financial advice. A little bit of this is just me explaining to you what I'm seeing in the market, what we're obviously hearing from other professionals and experts in the industry, and how you can utilize this information for decisions you have to make. Let's say you're thinking of refinancing your mortgage, buying a new home, upclassing your home, obviously going to the next level. This is just education at the end of the day. Even though I am a wealth management advisor, I still want to put that disclaimer out there and obviously give you that information. So why don't we kick it off here today? And as usual, love to hear your feedback, like, subscription, all of that helps, obviously, and your feedback is very important to me. So why don't we kick it off? We'll start off with some information on interest rates and we'll continue from there. So let's kick it off. From Bloomberg. The title of the article is Bank of Canada Deputy Signals Officials on Track for March Hike. So as we've been talking about a lot recently with inflation and obviously the path that the Bank of Canada may follow, we have here the Bank of Canada mentioning that it's on track for a March hike, which what I've been hearing in the market is about 80 or 90% from the experts that the bank will increase. The question now I've been hearing a little about it will be 50% or sorry 0.50% or a quarter basis point or 0.25%. So let's kick it off into the article. Where do we have? Taking questions after a speech on Wednesday, Deputy Governor Tim Lane was asked about potential timeline for reducing the central bank's balance sheet. The Bank of Canada would consider it once it starts to raise interest rates, he said, then stop just short of saying policy changes are coming at the next decision very shortly here on March 2nd. We're going to certainly consider starting that process fairly. We'll be doing that as soon as we start to raise interest rates, he said. Quite likely we'll be saying something about that in the next couple of weeks when we are actually at the stage of changing our when we're pretty much what they're saying is actually at their next decision point. So what they're saying is we're going to wait to raise interest rates, which potentially may happen in March 2022. And then potentially for tightening or for their bonds in terms of tightening that policy as well, which is quantitative tightening they're mentioning as well. So here we go. Paul, which is a spokesman for the central bank, said by email no policy decision has been made, obviously, by the bank's governing council. While we now expect supply disruptions to ease and inflation to come down quickly in the second half of this year, we are alert to the risk that inflation may prove more persistent. Lane told the University of Calgary, "We'll be nimble and if necessary forceful." Obviously forceful is a reference to interest rates and how you control monetary policy. So in using our monetary policy tools to address whatever situation arises, as we've done throughout these turbulent times. So this most recent week, as you'll, or actually I should say a few days ago here, inflation on an annual basis, you'll see here that inflation hit 5.1% in January. So that's adding additional pressure, obviously, on the Bank of Canada. Last time, Omicron, the shutdowns really changed that path and obviously had a factor. Right now, currently in February, we obviously had the truckers' protest, which shut down the border, thereby reducing economic activity. That could potentially affect decisions, but then again, you also have what's going on in the housing market in terms of price increases that may have a factor, and I kind of want to show you that next. This is a tweet from Daniel Dalmelis. He's a realtor in the GTA in Ontario. And this is related to a freehold or a semi that sold in February here. You see this tweet is from February 15, 2022. This house in Vaughan listed for, let's say, 1.2 million. It sold for 1.7. So that's $500,000 over asking. That's absolutely crazy. Crazy, I have to say, and I told you I'd be using that term. As you can see, this house is about 3+1 bedroom, 4 baths, and obviously I don't have the pictures to show, but you can definitely pull this house on House Sigma to see for yourself. Here's the actual address here from another individual on this thread, which is 19 Mark Senti Boulevard in Vaughan, Patterson. So you can definitely pull this up. You see it's 4 bedrooms, 4 baths, 1 garage, just to see for yourself how the pictures look. And this house sold for $1.7 million. Absolutely crazy. Continuing along, I just want to share some data with you, pretty much from the Bank of Canada since we're talking about them. And this is from Daniel Falk. He's again a real estate, definitely a thought leader in the Ontario and Canadian real estate market, and definitely his Twitter account is followed. So I definitely encourage you to check out his stuff there. Going through here, they're actually having a Twitter space here tonight on February 17th. Great information if you're interested in gathering more information for yourself, and obviously great education for for your family and friends if you want to share. So we find that first-time home buyers are the largest group of home buyers, accounting for 1/2 of home purchases since 2014. No specific mention of their annual activity, as you can see on this chart. I'll make it bigger. That first-time home buyers make up 50% of home purchases in Canada, with the other largest being repeat home buyers, and obviously a certain portion being investors. Continuing along, I thought the next one was quite interesting. So investors are home buyers who either purchase an investment property while maintaining their primary residence, or purchase a new residence to live in while they're converting the current one to an investment property. So that's happened quite a bit ever since the pandemic. Interest rates became cheap, credit was cheap as ever. Home appreciation prices obviously increased, supply and demand, from there, that appreciation. So that money that's technically on the books or on the sheets, people are utilizing that by refinancing and deploying that capital in the market. And that's obviously had a huge impact in terms of what's going on in the real estate market in Canada. Communities where obviously, we're hearing about Durham region increasing 50% year over year. This is Durham, not Toronto, at 50%. So obviously driving further, but those prices definitely increased. And obviously work from home obviously made a difference, but slowly but surely people are coming back to the office. Some people may never come back depending on decisions they made in their personal lives, but obviously, it's an ever-changing market, and 2022 will bring something new with it. So that's what I want to share with you. I'll definitely be having these links in the description below. And I really just want to summarize it in terms of, March 2nd is a really important decision by Bank of Canada. It either starts the next leg or next cycle of the credit cycle for Canada, or it continues to delay that. And we'll see how long such price increases last in the market, such as this house that's sold in Vaughan. So I hope you've found this video helpful, insightful, and you were able to walk away with something of value. If you did, I would appreciate a like, comment, subscription. It's a much appreciated, and it definitely helps myself and this channel. So thank you for your time, and we'll be chatting soon, very shortly. So have a good one. Thank you.